Hey everyone, welcome back to Corporate Dakota, the place where we'll be digging into the juicy details of corporate filings and seeing if these companies are really walking the walk or just talking the talk. Today, we've got a filing that smells like a big money move, so let's see what is cooking. Before we dive in, if you are all about getting the real story behind corporate actions and want to stay ahead of the curve, make sure you are subscribed to the channel, and hey, we've got a fantastic community over on Discord where we break down these filings even further. The link is in the description below, so come join the conversation. So, what we have here is a current report filed by Palvella Therapeutics Incorporated. The earliest event reported here is the 25th of February 2026. This usually means something pretty significant happened on that day, something they had to tell everyone about right away. The company's name is Palvella Therapeutics Incorporated. They're incorporated in Nevada, and their IRS employer identification number is 30-0784346. Now, they've got a bit of a physical presence in Wayne, Pennsylvania, with the address 353 West Lancaster Avenue, Suite 200, which falls under the zip code 19,087. Their phone number is 484-253-1461. Let's look at what they're trading. Their common stock with a par value of $0.001 per S-hair trades under the symbol PVLA on the Nasdaq Capital Market. This tells us they are a publicly traded company and investors are keeping a close eye on their moves. The main event in this report seems to be under item 1.01, which signals the entry into a material definitive agreement. This is pretty standard for a company making big announcements. What this filing is telling us is that Palvella Therapeutics Inc. on the 25th of February 2026 signed a big deal called an underwriting agreement. Think of this as a contract for selling their company stock. This agreement was with some big players in finance, TD Securities user LLC Cantor Fitzgerald and Company, and Stifel, Nicholas and Company Incorporated. These guys are acting as the representatives for a group of underwriters, which are essentially the companies that will buy and then sell the shares to the public. So Palvella is agreeing to sell a whopping 1,600,000 shares of their common stock. The price tag for these shares to the public is set at $125 per S-hair. This is what they call an offering, and it is not just a simple sale. The underwriters also have an option to buy as many as 240,000 additional shares if they think they can sell them. This is important because it means Palvella might get even more money if the demand for their stock is high. Now, let's talk money. After all the fees and expenses associated with selling these shares are accounted for, Palvella expects to pocket around $187.3 million. That is a serious chunk of change. So, what are they going to do with all this cash? They plan to use it along with their existing funds to push forward the development of their programs. Specifically, they mention Quteran rapamycin and Quteran pitavastatin. This suggests they are a pharmaceutical or biotech company, and this money is crucial for their research and development efforts. They also say it is for working capital and other general corporate purposes, which is pretty standard language for any company needing funds for day-to-day operations and future growth. The deal is expected to wrap up around the 27th of February 2026, assuming all the usual closing conditions are met. This is a pretty quick turnaround from the agreement date. In the agreement itself, Palvella made promises, warranties, and covenants. This is all about confirming they've been truthful about the company and the stock being offered. They also agreed to protect the underwriters from certain liabilities, including those related to the Securities Act of 1933, which is the law governing the sale of securities. This is standard practice to ensure everything is above board. This whole selling process is being done through a prospectus supplement. This document provides detailed information about the offering and is filed with the Securities and Exchange Commission, or SEC. The base prospectus was filed earlier in January, and it was declared effective, meaning the SEC found it acceptable for public use. It is important to note that this report itself isn't an offer to sell or buy any of these shares. The full details of this underwriting agreement are available as Exhibit 1.1, and it is incorporated by reference into this report. This means if you want to read every single word of that contract, you can find it as a separate document attached to this filing. There is also an opinion from a law firm, Brownstein Hyatt Farber Schreck, LLP, regarding the validity of these shares. This is another piece of assurance for investors that the shares being sold are legitimate. This opinion is filed as Exhibit 5.1. Under Item 9.01, we see the list of exhibits again, confirming the underwriting agreement and the legal opinion. Exhibit 23.1 is the consent from that law firm, essentially saying they agree that their opinion can be used in this filing. And finally, Exhibit 104 is the cover page interactive data file, which is a machine, readable version of the filing for easier analysis, embedded within the inline XBRL document. And looking at the signatures, this report is signed by Matthew Korenberg, who holds the title of Chief Financial Officer on behalf of Palvella Therapeutics, Incorporated, dated the 26th of February 2026. Now, let's step back and look at what this all means. Palvella Therapeutics just announced a massive stock offering, raising nearly $200 million. This is a huge vote of confidence from investors, but it also signifies a critical stage for the company. They're clearly at a point where they need substantial capital to fund their development pipeline, specifically for those QTORIN programs. This money is essentially fuel for their growth engine. The fact that they're selling so many shares at $125 each means the market sees significant potential in their future, but it also means a lot of new shares are entering the market. For existing shareholders, this could mean their ownership stake gets diluted, meaning their percentage of the company goes down. However, if the company uses this capital wisely to bring its drugs to market and generate revenue, the overall value of the company could increase, making the dilution worthwhile. The risks here are pretty apparent for a company like this. Pharmaceutical development is incredibly expensive and prone to failure. If their QTORIN programs don't pan out or face significant regulatory hurdles, that $187 million could vanish quickly, and the company's stock price could take a nosedive. They're betting heavily on success in their research and development. On the flip side, if these drugs are successful, Palvella Therapeutics could be looking at very substantial returns. Not just for the company, but for its investors. This offering is a bold move, clearly signaling their ambition and their belief in their future products. It's a high-stakes gamble, but one that could pay off handsomely if they execute their plan. Alright, that is our breakdown of Palvella Therapeutics' latest filing. What is your take on this big stock offering and what it means for the company's future? Do you think they can pull off their development plans with this new capital? Drop your thoughts in the comments below if you found this analysis valuable. Hitting that like button really helps us out. And speaking of help, subscribe for more deep dives into the world of corporate finance. And don't forget to check out the Discord link in the description to join our growing community. Thanks for watching, and see you next time on Corporate Decoder.